So let's get to it. Let's talk about a little bit of what's cooking here. Coming into the last 2 weeks, the topic has been a decent amount of systematic selling. A lot of that short covering we saw back here. A lot of the short covering into this bear market rally from systematic funds, CTAs, that crowd. They utilized this weakness to add a lot of that short exposure and then some. Actually put on more than they had in some places. So a lot of those funds, a lot of the professional side, I mean, and this has been the case throughout this bear market. They get squeezed from time to time. They got to cover some of those shorts. They never had the tendency to flip and get long much at all, but there have been decent squeezes, right? So here was one big one where they were leaning short, they got squeezed, they had to cover, and then again, he slap them back on as the market rolled over, and pretty much a mirror image here, same fashion, squeezed. They were a little bit more short into these lows. They got squeezed hard and they covered, they didn't flip long. And ultimately, this is what's holding a lot of these funds and again, professional managed money from getting that FOMO that we're used to seeing them get, right? Where they chase strength because they're underexposed and chase performance. With the macro backdrop the way it is, and with the Fed basically, again, rigging the game, obviously, you know, they're not stupid people, right? I mean, they're professionals for a reason. And, you know, they avoid that FOMO. And instead of chasing and creating more momentum to the upside, they get saved by Powell. They got saved by Jackson Hole, right? If this rally, hypothetically, the Fed wasn't doing what they're doing, in all likelihood, you probably see further squeeze until they reel these guys in on the long side and then hammer them hard. All right, so with the Fed rigging the game, it's been a whole different dynamic that none of us have seen before and aren't used to. Okay, so the last couple of weeks, it was really difficult. Not like it's been easy at any point, but it's been really difficult to try to get in the middle of this with that sell side flow so lopsided, right? If you are a member of the Steam Room private Twitter, we've talked about the Goldman updates, you know, a lot of brokerage firm updates regarding Elliott, regarding that CTA fund flow and how lopsided it was, how negative it was. And it was prudent to stay away completely until they kind of run out of bullets. And that's where we are now. That's a perfect segue to where we are now. Here, that systematic fund flow changes in a big way, okay? And what I mean by in a big way, a lot of that heavy selling that was just flowing into the market, into this downturn here, has dried up significantly. Okay, doesn't mean big buying is coming in. You know, we're going seasonally. September is a rough month. Mid-September, you got the buyback blackout period. That takes another form of buying out of the mix. But I think the key takeaway, and I think it's important enough, is that big selling that we actually saw took place right in front of our eyes dried up, and actually was drying up this week. Okay. What does that mean? You got a CPI coming up. Again, you don't have to be inflation aficionado to have an idea that the commodity parts of the CPI are more than likely softening, right? We see commodities rolling over all over the yard. You know, sure, rents are going to remain sticky and all that fun stuff. But in all likelihood, you could see them finding a way to paint that CPI number coming up in a bullish way, right? So two things. In all likelihood, you probably see a squeeze ahead of it. I'd be really surprised, okay, if players remain significantly short without hedging ahead of that CPI. Okay, so a lot of times you see, no, the CPI is now Monday, is it? When's the CPI? I think it's towards the end of the week, isn't it? Anybody got an exact date on the CPI? I think could it be Thursday? I don't want to, Tuesday? You know, it used to be the same day. Am I right? The same day during the week? Now it's different days, unless, you know, this has been going on for a while. I thought it used to be always on a Wednesday or something to that effect, but I guess not. Damn, Tuesday. So we could be seeing the start of it already taking place here, right? We could see the start of, again, bearish hedging, which comes in the form of buying, right? Squeezes cover, that's buying, right? They're hedging positions, buying calls. So you get, again, an artificial upward bias and momentum over the course of the next couple of days ahead of it, right? And then again, we'll see and try to measure how much of a squeeze and where a lot of the sentiment sits going in to the CPI, whether they're, you know, how much may be worth post CPI as far as upside is concerned. All right. You know, personally, I just can't get excited for anything more than just a trade period right now. Again, we'll touch on this a little more like we have on every single webinar, but I don't see anything that's screaming that it's the start of a new bull market. You know, we talked about we want to see that fund flow kind of capitulate, right? That's usually the final chapter of a bear market. We haven't seen that yet. And more importantly, we're seeing improvement in the sweeper activity. They are selectively buying some names, albeit still the bulk of the buying is showing up. I guess the most aggressive part of the buying is showing up in short-term calls. And that's because they're trading, right? They're playing just the same game plan we've had. All right. So I'm not seeing anything of a major difference to signify, to make me comfortable thinking that I want to start building a basket in names that are seeing flow for longer term horizons. Okay. But again, glass half full. The difference is we're seeing interest in individual names and not correlated to the overall market. So it's kind of resembling action in select names, not betting on a certain sector, not betting on the market to squeeze and these names to benefit. They're kind of looking for alpha in these names regardless of what the market may do, right? And I mentioned to members earlier in the week, that's basically, like, a lot of people ask, well, when's it time to swing trade names? Even for trades. Like, for me, it's a simple question, but it takes a while to get to the point. Like, to swing trade names in this environment, you have to be comfortable with the fact that you're placing a bet on a name, okay? And you have to have the conviction and belief that you're not relying heavily on the overall market for you to be right. Does that make sense? Okay, so when you get comfortable to the point where you're looking to do some stock picking and swing trade names, you basically got to be at the point to say, all right, I'm gonna tail this Rivian flow, you know, September monthlies or October's, whatever it is, because I have the belief that even if the market chops around, we have evidence, we've seen some evidence that, you know, a name like Rivian can buck the trend and outperform the overall indices. Okay. And that's what we are seeing, right? We are seeing that. And that's the difference, right? That's the positive out there, is that we're seeing action in names, and we're seeing names perform regardless of what the overall market may be doing, right? If you look at a lot of names out there that have been seeing some of the best action, and you look at a chart of the S&P 500, they look different. They look different. So that's the point you got to get to, right? And each and every one of us is different, right? We're all wired differently. So there's nobody who can tell you when that time is. But when you're seeing enough evidence to the point you're comfortable placing a bet on a particular name, and you're not totally relying on the market, right? That's when the window opens, at least for me, to do some swing trading in individual names. Okay. Now, again, we're talking about on tactical time frame. We're talking about swing trading names, right? It's a lot different to where we feel like the downside is limited from here, and we want to build a basket in names gradually off the flow, right? That's a whole different can of worms. That's a whole different can of worms, right? That's a belief that, all right, we may go lower over the shorter term, but the reward is a lot larger than the risk, even if we're early. And I am not even close to there yet, not even close to there yet. But again, tactically for names, again, you don't need me to tell you, because you probably notice it with your own eyes, Now, another point, and a couple of you guys brought this up to me again this week, almost in the rebuttal to that. Day trading these names haven't been all that bad either, So that's something you got to measure, right? Is the risk of holding these names overnight for an extra pop worth the risk of coming into a headline and, giving back your profits? Okay, but that's a fair point. Even though we're seeing improvement on that end, we've also seen improvement intraday on very similar names, on a lot of these names. There's a lot of momentum in these names. I'll give you an example. Like, we haven't, again, this is something we haven't seen for a lot of this bear market in names. You guys have heard me cry about it for a long time. Okay. A name like Match yesterday, right? We haven't seen that type of action, standout action. Again, even though it's short-term stuff, come in aggressively and create enough momentum to where it ends up being a nice day trade. A couple of you guys brought up the Snap or the Rivian. We just, individual names on the long side just haven't been a part of this bear market at all. And I told you guys, that's going to change. That's going to change. Even if this bear market continues for God knows how long, okay? That's going to change, because they always overdo it on the downside on individual names. They shoot and ask questions later, right? And not every name should be treated the same, right? But they are when you get into a highly correlated bear market, and everything sells off with the S&P 500. Okay, so you got what players start to do is they look for value and opportunities, and a common strategy, as you guys know, if you're concerned still about the overall market, is buying a name or names and adding some protection alongside it, right? If the market's the main concern, like for example, I don't know, again, Snap, right? You like the action in Snap. You think the downside's limited. The upside reward is well worth it. The only concern you have is something blows up in Europe or the Fed does something, and obviously that's a whole different ball game. That's where protection comes in. Again, if you're if you're oversizing, you know what I mean? Otherwise, I don't think it's worth it. I don't think it's worth it. If you're sizing heavily, then obviously it's the smart thing to do. All right. So that's that. All right. There's some good. We still are in the thick of things here. You guys will see, we'll go over some of the indicators and stuff that we look at every week so you guys can see where we're at. But going into next week, we should, again, how much of a squeeze, right? Didn't we talk about this on the last webinar? We're going to get to a point where we got a decent setup for a squeeze. How much of a squeeze will there be, right? And again, similar again to the last bear market rally, right? You think, okay, downtrend, still being a downtrend, and squeeze some bears here. That's kind of a low ball area to look for, right? See here, this is what a lot of us were looking at. This setup here. Remember, we were looking at this, how we were almost in the same exact spot. Look, okay. But to me, the difference right now is has a lot to do with the credit markets and such. You don't have credit spreads ripping here, right? You don't have that other force of energy that gets algos to sell everything coming into play yet. Now, maybe that changes at some point. Today was a good test with Powell. It didn't happen, okay? So that's a big difference from, this Niner setup, similar to what we have now, failing. It does resemble it though, right? Here's your Niner, a little bit of a floor, then a little bounce, then it does resemble it. So that was our fear going in. To me, it looks a little bit different. There's a way to keep tabs on this, right, on a day-to-day basis and get out of the way if things change. This is not the market to say, okay, well, I'm going to take a shot, I'm going to buy here, and even if I see credit spreads start to widen out and all the things I was worried about start to happen, I bought it, so I'm just going to sit through it anyway. Right? That's stupidity. So there's a way to keep tabs on this stuff to get a better feel of how things are going in real time, right? We talked about like the credit stuff, the LQD and the IEF, right? Intraday gives you an idea of, all right, are there, again, those greater forces at play that really I have no shot on playing anything on the long side? Or are things, relatively normal? And this way now I can play off flow. I mean, have you guys, I know some of you have, because I speak to you and you guys have mentioned it, but have you guys been able to utilize that on an intraday basis? Like keeping an eye on that stuff on like credit spreads and all that stuff? You have? Right? So like, yeah, for me, and it's extremely tactical. So that's why I guess it's not for everybody. But when I simply put, right, and it's not always going to coincide with what the market's doing. Okay, it's not. Sometimes you'll see, this ratio relatively quiet and the market selling off a little. Okay, so it's not like some crystal bullshit, but simply when this is happening, right, is where I put the gun back in the holster and I'm not looking for a long entry. You understand? And when this is happening, I have three eyeballs coming out of my head looking for a long entry. You know what I mean? So I want to get in the middle of this, right? Because it's almost like I got the wind at my back and I want to stay out of the way of this when it's going against me. All right. But unfortunately, and here again, here's the thing, I guess, that maybe I don't have the FOMO like some of you are stressing out there. If I really saw signs like this was the start of a major bottom and a new bull market, trust me, I'd be damn jumping out of my shoes right now, trying to look for things to get long and feeling like this market was going to run away from me. But because I don't see that, I'm more of, how can I explain it? I'm more to take a step back and look around. You know what I mean? It's, for me, it's like the game slows up, believe it or not, now, as crazy as it sounds, even with the craziness out there, because I don't have that FOMO. When I have that FOMO, everything feels so fast, like it's running away from me. You know what I mean? One little tick higher, and I feel like shit's running away from me, because I feel like I'm going to miss it, because I'm seeing signs, that things are likely going to push higher. But when we're in these times here, like even if I miss a rally, it's almost like, wait a couple of days and you probably get a sell-off right back to where we were, if not lower. Another thing I wanted to mention, again, I don't want to talk too much macro with you guys, is this, right? And this is Hartnett of Bova, who we follow pretty closely. We get a new note, which is going to be interesting tonight. We'll see what he has to say. But this is pretty much at a big spot here. And you could see how this is going to play a major part. And I guess that's why he says to keep it simple, right? So if this holds, right, and you kind of get this double top here where it runs into resistance and doesn't break out, okay, doesn't break new highs, what we're likely to see is what we've been talking about, this kind of choppy range where there'll be some squeezes with decent upside. So in other words, that will result in these lows holding, and you get these squeezes, sell off, but you can play off of these, right? Especially in individual names, you can look to make plays off of them, playing for that squeeze and bounce, because the odds of this thing rolling over and breaking through are a lot less, right? On the flip side, all right, those of you who are looking through bearish lenses here, again, this is Hartnett. This is not everybody feeling this way. He feels that if you do get that breakout, it's going to result in a new leg lower, new lows. Okay, so that's something else to keep an eye on. This is the 10-year yield, obviously. And that would mean rate pushing higher and weighing on markets. Obviously, that's not good, right? Okay, so that's mostly on the macro side. Sentiment-wise, let's look at a couple of things here. Like, look, I was looking for this to show you guys again, because I think this gives a good depiction of how things are here. Look. Okay, these are the Goldman sentiment indicators. Right? A lot of them, we look at them every week. Ooh. So the blue diamond, dark blue, navy blue diamond is where we are currently. So we're back over here now. Okay. And again, this is the only thing really weighing on things right here. Right? That's that fund flow we keep talking about. Believe it or not, and we'll look at it, some cracks there too. That's a risk. That's the risk. Is that retail fund flow. Okay, and what I mean by crack, there's been, last week was the largest outflows we've seen since a few months ago. Okay, believe it or not, right? We were talking about more money has been coming into the market on a weekly basis. So the opposite of capitulation. So we started to see now some outflows, and last week was a decent size outflow. Okay, remember we talked about once the economy starts to look a lot worse than it does now, which is very likely to happen, and once the Fed accomplishes their mission and affects the job market a bit, we're likely going to see those fund flows. We're going to likely see those outflows, I should say. Okay, and that's a risk. That's a risk. Now, for example, the last 2 weeks, there were outflows, and that added to the negative flows coming into the market, right? So you had that, you had CTAs. It was just awful of lopsided flows the last couple of weeks. All right, so something else to keep an eye on, but this is what we want, right? This is like, again, I would call it the final chapter of all this, is to get this baby start moving this way. And then we can make the argument that all the selling has been done, right? Everybody who wanted to sell has sold. We can't make that argument, no matter how crushed Skills and Twilio look, when this thing is all the way over here. All right, another promising sign, the retail trader, right? So fund flows are more retail investors. The retail trader is pretty much kaput. Pretty much has been hit over the head. The volume, if you guys saw that post, yeah, they pretty much, could go lower. They could get washed out a lot more, but they're a non-event right now. Yeah, they're frustrated. They've thrown in the towel. Believe it or not, you know what's interesting? The retail trader has become an investor. Okay, so a lot of you were asking, how could that be, right? How come we're seeing the retail trader kind of get capitulate and get washed out, but these fund flows still seeing money come in? This was before they threw in the towel. They took the outlook, okay, instead of actively trading, we're going to take a longer term approach, and we're going to buy ETFs and the names we like and tuck them away. So they've been doing that, and it's only a matter of time before they get frustrated doing that. They'll get only a matter of time. All right, so it's a process. That's why these bear markets take so much damn time. So much damn time. One other note, this is more of an opinion, I guess, based off sentiment and all. And I fit the bill, because I told you September is when I was managing money, I would go into all cash the whole second half of August, no matter what, in the fear of September, because I couldn't be as tactical as I am now for my own money. Okay, it took a while to get out of client money. So September is a disaster. Okay, that being said, okay, we've seen some selling, and now you have, on a positioning basis, right? If you look at positioning, a lot of the positioning is positioned for a pretty bad September. Okay, what the market likes to do, you guys know, is throw them a squeeze in September, right? And then what? Hit them over the head in October when they were looking to probably buy, right? So the market loves to throw monkey wrenches into the equation when things get a bit crowded. And on the professional side, it's pretty crowded. Let me tell you something. On the professional side, there's nobody positioned for upside this month. Okay, nothing. And like I said, I don't think we're going to have some killer rally that's going to rip back to new highs, but you can at the least squeeze some of these CTAs and systematic funds and see some bullish momentum out of it. Who's this? McElliott? Oh, that must be HC. Let me see. Oh, this is McElliott's suggests upside SPX is capped at 4,000, 4,005, but on McElliott, a couple of notes suggest vol control. Right. So the levels you're talking about, HC, which the CTA levels, which McElliott had mentioned, if we can trade above, will force them to do some buying. So who knows? I told you, the upside HC, I think, is as far as a multi-day period, God forbid multi-week period, Vol control, Praveen, vol control funds. The upside over the course of days and weeks, I have no clue, I have no clue. Because again, look at what you got to take into consideration, like again, this last rally, the Fed attempted to weigh on this rally, but the markets didn't react. Credit spreads didn't react. Nothing reacted to Jackson Hole, and that pulled the plug on the rally, right? And it happened to be at the 200 day too, nevertheless. Let's look at that. Let's look at that because I think this is something interesting here. Okay, now I don't want to confuse everybody here. We're dizzy enough. Oh, one second. But you got a little divergence here between financial conditions that go into like the Goldman Sachs index and credit spreads, okay? And we'll just talk a little bit about what that may mean here. Oh, not credit spreads. Yeah, I'm talking about credit spreads, but I have to do this. Yeah, swap up. All right, so you see this? Okay, the financial conditions index, which Goldman measures, I can show you what the makeup of that is. The Goldman one has a few different ingredients than some of the others, but that's at a new high. All right, so the recent downdraft since Jackson Hole, financial conditions have tightened pretty significantly according to the Goldman measures. But what I look at, even if financial conditions are tightening, I like to look at swaps and credit spreads, okay? Because for me, that's that extra force in the market that triggers algo to go on insta-sell, right? We talked about it. When swaps are doing this, the algos are selling every rip, right? Every rally, they just sell into, okay? And when swaps do this, the opposite's going on, okay? What's interesting the last few days here, you could see, is even as the market and financial conditions were tightening up, swaps hit the brakes, And that's interesting to me because if we stay in some sort of range, okay, what you're likely to see, because we're still going to be in a bear market, you're likely to see the same thing happen where you get a rip, right? Credit spreads blow out a little, they sell off, they ease, you get a pop, right? It's almost like a mirror image of each other and can work in opposite fashion and hold things together. Like as I've been telling you guys, in a bull market, in a normal market, this is useless to even look at. But it's no coincidence, I sound like a broken record, no coincidence that it's almost a mirror image of each other here, right? So I find this a little bit interesting here. Think about this. With Europe, with what happened with what's it called, Gazpro or whatever they are, with all the noise in Europe, with the winter coming, with all the negativity, with the Fed now 80% chance they're going to hike 75 basis points. So think about all that noise, and this happened. All right? It had every reason to do that, but this happened. So again, could be an early sign that we're going to be more range bound than just breaking new lows. Now, what would eliminate that, right? What would change that view is if you see these things break out. So, kind of, it's similar to the way Hartnett from Bove is looking at things. He's looking at the 10-year, I'm looking at spreads and swaps and looking at it through the same point of view. Same point of view. So very simply put, guys, like if you want to keep it simple, especially now we're seeing flow in names, right? I would focus more on names than the index, because I think, if the index gets choppy, you'd rather be in names if they're catching decent action, right? That makes sense. Because the chop, wow, yeah, god damn, I like that ZS. That's crazy. I like that stock, ZS. I always like that stock. Damn, 17. So the point I was making is you want to stick to names because they can outperform the chop, right? Market does nothing that day, but Snap ripped or ZS ripped or Rivian ripped. All right, we'll talk about names in a little bit. We have some names to talk about for a change. All right, so again, keeping it simple, as long as this remains range bound, okay, we look to buy, again, if you're choosing the swing trade, you look to buy on the pullback down days, you're looking to play a name that catches decent action, and where, you pull the plug on any of the long overnight strategy is if you see this do that, if you see that do that. So again, that's just keeping it simple. What else? CTAs, I'll show you where CTAs are out right now according to TD, and then we'll talk about it. Anybody else have something that you guys wanted me to touch on? Oh, Sharpies, we could talk about Sharpies, yeah. So here is the Elliott levels that HC was talking about. So here's the S&P 500 down here. They're 100% short, 39.10 and a half. Buying over 41.28. So if the rally finds some legs, you get some additional buying come in because they're so damn short. I mean, they really shorted the shit out of this downdraft. Excuse my Yiddish. Here's the CTA tracking. So here are the indexes. 16%, 19%, 21%. They put on some nice shorts the last 2 weeks. All right, now these, now the only way these increase at the same pace is if you get the floor break. You understand? You need a big boom for these guys to get aggressive on the short side again. So you understand that shorting drives up here. Makes sense, right? I mean, that's, if you think about how thin markets are, and guys, forget about even liquidity. Liquidity is a disaster, but these systematic funds are moving markets more and more these days. They move markets. Like literally, a lot of the rally, these squeezes come from just them. Yeah, they're his model. That's his model. They're at 100%. But for this, like TV's model, for that to go to 100%, that takes a lot, McElliott's is different. It's more aggressive, his model. Yeah. And, that's because you have these, a lot of, if you think about it, a lot of people are in cash. A lot of the pros are in cash. A lot of them are hedged. We see it in the futures market, S&P 500 futures. You see the hedge there. They're hedged out their eyeballs. So you get a little buying or selling that comes in with some decent wood behind it, like we saw the last couple of weeks, and it could definitely move markets. Definitely move markets. The last point I want to make, and this is what I was getting at before. Everybody, including us, want a flash crash or a boom, right? All of us, everybody wants it right now. Everybody. Okay, you had, just before a guy came on, what's his face from Guggenheim calling for it. And then right after he called for it, the next sentence was, if it happens, I'm going to get aggressive and buy it. You understand? Everybody wants the lows to break to buy it. They're not scared of it. They want to buy it. They're in cash or short, and they want to cover and buy it if we crash. And that's usually a setup for it not to happen. You know what I mean? For it not to happen. Now, normally that would be, again, an ideal setup to get long and position for a decent squeeze, right? To the upside. Again, definition of decent squeeze. I don't see how that could happen. You understand? The Fed cannot allow that to happen. It can't, I mean, we got to swallow that pill. You understand? We got to swallow that pill that the upside we're used to right now is just not on the table. Not there. Now, don't get me wrong. I mean, from here to here is a pretty nice move. Okay. But again, you got to look at things risk reward wise, and in a normal market, we'd be buying this, right? And thinking at the possible start of a new leg higher and get aggressive as flow comes in. You understand? Now here, it's like, this is your only entry and your upside is nowhere near that. You understand? Nowhere near that. Like a similar example to what we were talking about back here, okay? Here's where the Fed said, nope, we can't. This cannot happen, okay? Cannot happen. Whatever we got to do cannot happen. You understand? If you here, again, not to get too technical with you guys, but one of the most powerful Fed tools is their mouthpiece, okay? If they can't talk a market down out of anything else they can do, if they can't get all hawkish and get the market to start pricing that in, they got headaches. You understand? That's where you hear the line going around from a lot of Fed haters and perma-bears, where the street loses confidence in the Fed, right? If that starts to happen, the Fed has giant size headaches. So they cannot allow any significant rally when they're battling inflation like they are. They cannot let risk assets run away from them. Is it possible that it can happen? Anything's possible in this effing game. It's possible we can crash and open up at zero by the end of the week. But it's, we got to understand that the Fed, that's their number one goal. Their number one goal is to keep a lid on risk assets right now. We realize that, right? Yeah, and the thing is like, you can't have inflation start to roll over and then all of a sudden risk assets explode, to the upside. Because all that work goes down the toilet, so quickly. Like that's why you hear them saying, and over again, right? They repeat themselves constantly over and over again. So the market gets their message. They want to raise, get to a level and stay there, right? So that's kind of like they're relaying to the markets, like, listen, we want, basically the goal here is not to destroy everything, not to create another 2008 debacle, but to keep a lid on things, okay? Because if they keep a lid on things long enough, right, and they keep running their mouthpiece the way they are, what's going to happen? We're going to fear a recession, right? We're going to start saving. We're going to spend less. You're not going to buy jar farts. He's not going to buy NFTs. He's not going to flip Bitcoin and shitcoin and Shiba, right? People stop doing that stuff And ultimately, yeah, boob sweat goes out the window. Ultimately, we always find a way to get that involved in these Zooms, right? It's always a topic we have to include, but that's generally their goal. That's their goal, right? People stop spending, they chill out, they stop speculating, they stop taking major risks, and you have things cool off. The housing market, same shit. So that's their goal, is not to break things. That's usually a consequence to what they do. But their goal is to keep a lid on things. You understand? Keep a lid on things. So like when you swallow that pill, when we understand that, okay, the playbook for that is buy pulls, sell rips. Again, a lot easier said than done, right? Makes it sound so easy. But that's the main playbook. That's the main playbook. Okay? If they break something in the process, that's when you can see things unravel to the downside. But without something breaking, something freezing up in the credit markets, you get this wonderful piece of art, right? This downtrend. This is what you get. So again, I know we talk about it. I got to remind myself too at times, like, this is what it is, This is what it is. Yeah, well, the dollar, Eric, how long, right, and the yen, how long can these things go on for without something breaking, right, Eric? I don't know. I don't know. Again, I'm being honest with you guys. I don't know this stuff well enough. You know what I mean? I'm an equities guy, right? Even above options. I mean, I follow the option market through equities. I've been an equities player my whole life. So I know the equity game. I don't know the currency game. I don't know. I mean, all I know is the shit's going on right now in the currency market, bugged out. Bugged out. And, even like energy unraveling, as bullish as people were, you telling me nobody's going to get caught in that? Crude, out of all things, with a leverage out their ass. So those are the risks. Those are the risks. The Fed president just shouted the opposite. What do you mean the oh yeah. Yep. All right. So moral of the story is, again, if we just to put it in simpler terms, okay, we're seeing some constructive action in individual names, so it brings individual names back into the equation here to trade. Okay, becoming more comfortable holding long positions, no, but now we can play names and we don't have to just play. Make a bet on the S&P 500 going up. Okay, that should make us feel good, at least, even if it's just for the near future. Do we have that in this bear market at all? I don't remember at all. Well, we had commodity names, right? Outside of commodity names, we never had even the squeezes. I feel we didn't even have action where they were doing some stock picking. And I don't mind that market for, like, if I can have my way in this environment right now, I'll take this on the major indices and stock picking under the hood. I'll take that all day long. All day long. Yeah, I know. I look at this Dixie every day. A crazy move in this thing. Crazy. Look at this. You'll be in the bunker. Yeah, this is nuts, Dixie. Nuts. This is nuts. Oh, you're talking to somebody else? All right. Anybody else looking for updates on any indicators before we talk some names? Hedge funds are flat. They're not short. They're just flat. Oh, Sharpies, you guys mentioned. Sharpies, there really wasn't anything new over the last couple of weeks. What you would like to see is another bump up, but we didn't even really get any more of a pullback. Oh, so you see here, this chart is as good as any. So you see it's come in a little bit here, nothing major, but there's really, there's no real takeaway. The reason why there's no real takeaway is because these guys are still short and hedged as they can possibly be. What I said earlier, I think applies. Like, this is a perfect example. Something really needs to bust for these lows to bust. Like you're going to need some oomph off of something for these lows to bust, because everybody is, so defensively positioned. Down here, this is small speculators. So this is, just look. So for a bullish signal out of this, you would want to see, like, let's say tomorrow, you want to see them just slap on more hedges or shorts, right? And then take the other side of that. Like, that would be, I wouldn't call it a new bull signal, but that would be something to take away from it. Otherwise, there's really, there's nothing new to take away from it. Yeah, that's exactly it, Eric. Everybody, again, it's not that they are afraid. There's two different things, right? Like, one thing is being afraid of new lows, right? And there's another thing of wanting that sell-off. Okay. When capitulation really shows up, nobody wants it. Nobody wants to buy it. They're shitting their pants. You understand? Nobody's like, oh, it's capitulation. Let's go. Get all that cash. Let's put it to work. It doesn't happen that way. Because when players are capitulating, think about how you're going to feel. You're going to feel the same way. You're not wired any different. You're not a robot. So when players are really capitulating, you're going to feel sick to your stomach, and you may be in cash, right? Because a lot of you are, right? You may be in cash, but to get yourself, it's going to take work to get yourself to buy off of that capitulation. Again, if you think about the COVID lows, right, is the most recent example. People were walking around zombies in Manhattan, and you're going to go buy a stock? It felt like the end of the world. No, this is not a correction. This is a bear market. This is a bear market. And the difference between the two, corrections are quick, violent, and they get capitulation right away off that quickness, right? Because there's usually something that sets it off. Something that sets it off, like a headline or something overseas, something breaks. A bear market, what happens is usually a correction turns into a bear market because of the lack of capitulation. Yeah, COVID was like a crash. You understand? It happened so fast. Exactly. So those corrections, and like COVID was a large, significant correction, but crash, whatever you want to call it, they don't go beyond a quarter, like 3-4 months before you start seeing things work their way back up. What happens is those corrections because of the built up of bullishness, okay, and bubbles, the final correction turns into a bear market because why? Players don't want to capitulate because they've been burnt capitulating on every prior correction before that. You understand? So if you sold into the COVID lows, you felt like an idiot. If you sold into the 2018 lows, you felt like an idiot. If you sold into the 2016, 2015, 2015 lows, you felt like an idiot. 2011 lows, you felt like an idiot. Okay? So all that buildup led up to 2021, right? You had SPACs go parabolic, Cathy names. You don't even have to handicap stocks. You could just look at the Cathy names and buy those and make money. SPACs, people changing the name on Twitter to SPAC Jesus. You know what I mean? All that buildup and all that fund flow, all of it. Again, there was no fund flow prior to 2021. None. It all came in second half of 2021. Right? So all that money comes in, diamond hands, good call, right? That right there tells everything. Diamond hands. How do you get capitulation when the most popular line on social media is diamond fucking hands? How do you capitulate? You can't capitulate, right? Great call, Brady. I don't have to say any more. That's it. Yeah, diamond hands is the adverse of capitulating, right? They're making the point, I'm never capitulating. I got diamond hands. Diamond hands results in this, okay? Torture, absolute torture. You know, but again, for me, I've never been a part of a start of a new bull market without those diamond hands breaking. You know, there have been periods, you know, sometimes months where there would be no capitulation and the market seemed like it found a bottom and had a so-called uptrend for the next 3-4 months, but then made new lows. 2000 was the perfect example of diamond hands, right? They didn't run that line, but nobody, I told you guys, nobody would sell those tech stocks after what they've been through, 97, 98, 99. Stocks used to correct 50% and then split and quadruple after that. So in 2000, March of 2000, stocks started pulling back. Everyone was like, I'm not selling one share, not one share. Right, unless you got margined out, unless they forced you out, which happened a lot, right? But that led to the 2000 bear market, right? Wasn't a correction, it was a full-fledged bear market. And like, if you look back, and you know, the NASDAQ was a lot worse than the S&P 500, but there were periods where multi-month periods where stocks worked. There were names working. The market didn't make new lows, okay? But then ultimately made a new low after that. It wasn't the start of a new bull market. It ended in, when did it end? 2002. 2002. So it took 2 years. What are we, 7 months in? How many months are we in? What month is it? Oh, September. How could I forget that? I'm so effing dizzy. Hold on a second. Oh, I always like to do things asinine here. I hate this. Oh, here we go. So look. Why when I'm on a Zoom, this takes so long to like scroll through the chart? It's too many things going on at once. So look, this is what, you know, it looked like, right? This is like 5, 6 corrections over the course of 2 years. So this is the 2000 top, right? So all these pullbacks, all these corrections, people got shaken out and they felt like morons and then they didn't want to sell. They had diamond hands, right? And then it led to this, okay? So all these, right? These are all rallies that when you're in the middle of it, felt like, potentially the lows are in, right? Look at this. Oh, double bottom. Oh, no, new low. Oh, look at that. Selling dried up. New rally, rollover. And you know what's nuts about 2000? Think about all the internet names, all the tech names blowing up, who went out of business, Enron, this, that, WorldCom. You know what happened towards the end of that bear market? You talk about a vicious bear market. Do anybody remember what happened at the end of that bear market in 2001? What happened right here? You were in 8th grade, so you still should remember. Right here. 9/11, come on. Exactly. 9/11. Oh, you guys are so young and you're bitching and complaining about bear markets. Oh my. I wish. I'm too old to remember exactly. Anyway, so think about, you had the tech bubble, the internet bubble blow, all these tech names wrecked, okay? And, right, you get this rally, right, thinking it's the bottom, and then things start to roll over. And I remember you guys probably, oh, Brendan, I was just going to ask. They were shorting airlines. Like they were buying puts and shorting airlines before 9/11. I bullshit you not. There was actually a big investigation right up afterward. Yeah, I don't know. But anyway, then that boom, the market shut down, the market closed, couldn't open. It was scary times, man. But look, that was the big kaboom. And that was at the end of it. And look at this. 2000. Oh, this is 2002 right here. Oh, look at this. Oh my God. Can you imagine this? Torture, guys. Torture, guys. That's what I'm telling you. Listen, about, are these the lows? Is this the bottom? Get it out of your head. Because if we got to go through something like this, oh my God. Oh my God. Jesus Christ. You know what I mean? This is the good. I'm telling you, listen, the good news. And I told you this from here. Okay. Even before, I think it was before 9/11. Before 9/11. Before 9/11 on, tech stocks were a disaster. The indexes were useless, but under the hood, there were individual names rocking. I'm telling you, rocking. Oh, when it was going on in China, Eric? When it was like just starting up in China? Yeah, remember the market initially like ignored it for a couple of days, right? Before shit hit the fan. It was like the market didn't care. Market's a crazy animal. Crazy animal. But yeah, I mean, it doesn't, listen. Do we have the same excess that we had back then? I don't know. Who knows? Again, I don't think in the equity markets we do. We had it in the crypto markets and stuff like that. But you can survive it if if your eyes aren't glued to the indexes, you keep an eye out for names and stuff like that, you can get through it and you can make some money. It's not as bad as it's not all as bad as what we've seen so far. The bad is going to come in periods, and there are going to be other periods where you can make some money, you know? So that's what we got to try to do. That's what we got to try to do. What do you mean, Eric? What do you mean by, oh, you're talking about different charts right now, tell different stories? Well, we're still in the process of, you know, we're still into this bear market right now. You know, we're still in this bear market. It's hard to envision, like, you don't have a great setup here for equities. You didn't have one coming into this year. We all knew it. It wasn't, right? You didn't have to be that intelligent. We all knew it. Like, look at this. Right? If I showed you this chart last year while the market was rallying, you would have told me, oh, I'm gonna sit in cash. I'm not even thinking about buying stocks next year. Look at it. You know? Look at this. Right? If I asked you, oh, guys, in the heat of the bull market last year, you know, if I told you, oh, guys, in your opinion, what do you think is the one thing that can really cause a bear market? You know, not a pullback, but a bear market. You would have thrown me this chart. You'd have been like, here, this is my one big fear. The whole freaking world tightening at once. It's amazing how the market has held things together, in my opinion. Amazing. I think the Fed deserves credit. I'll get shot for this, especially by people on Twitter. But I think they deserve credit for the way things have reacted so far. Because I would have told you before all this, there would have been shit lit on fire by now. Yeah. No, and they're going to be, I'm sure you guys are aware of it. They're going to be opportunities. It's going to, all that good stuff is going to come. It just takes time, you know? It's healthy. It takes time. And again, it doesn't have to be as bad as it looks like it can be. You know, there's pockets of time throughout the process that can treat you well. Yeah, a lot of people made a lot of money in the last bull market, without a doubt, you know, but people still will complain, you know, and a lot of retail probably gave it back. But this is a crazy chart. This is a crazy chart. Like, if you think about it, look at here. This was prior to 2008. And then look what happened. Right? So every bottom lined up with this, no? Where do you catch a bottom when this is going on? Can that be possible? I don't think it's possible. Huh? What do you guys think? You know what I mean? Like, is it possible with this red line, especially going up in the air like this? Is it possible for a market bottom? I don't know. Yeah, but you'll get this. You understand? Like 2009, the bottom is here. You had this, right? And then you bottomed. Right? COVID, you had this. Like you're gonna, right? That's my point, that you're probably gonna need to see that when we bottom. Like, look here, 99. And then we bottom. Like, we're still elevating here. right? And think about that, Eric, like the damage, all of this is not going to have an impact on things. Jesus Christ, I don't see it does. I don't know. I don't see it. You know what I mean? I don't see how it cannot. Yep, the elevator down. Exactly. That's how it usually happens, right? Yeah. I mean, once you start seeing this do this, then you're cooking. I mean, this was what? Oh, this was 2011. Wow, I didn't even realize that in 2011. I don't remember that in 2011. I know it was the government. I remember the government shutdown during the correction, but I didn't remember tightening aggressively like that. And here's a nice sweet spot here. Look at this. This, you guys know what this is, right? This is on QT is on autopilot, late 2018. Jesus Christ. Oh, yeah. Good call, Harry. Yep, you're right. So, if anything, this tells us we have, we still have some time, right? I mean, if any takeaway from this, well, 2011 was harsh. That's another low, Eric. That wasn't an easy low to buy. That was a vicious little pullback, 2011. And you know what? You had 2008, wasn't too far off from there. So that was still in your head. This is gonna take some work. Yeah. What else? The fund flows, what do they look like? Let me see. Do I have one handy here? Oh, yeah, we'll talk about names anyway. Let's talk about some names while we have them. Let me see if I can just find the fund flows quick. Forget it. Maybe here. Oh, here it is. So it's this here. Okay, this was the chart I was looking to show you guys. Okay, see the navy blue line? Look at this. Okay. Okay, do you see that? From this only, and before that, you got to see dead, like a dead heartbeat. This is from the beginning of 2018. Okay, for 2 years, no interest in equities. Right? So that's why, like, you had a lot of people who follow the fund flows that, when the market, there were pullbacks, but people were saying, it's a correction. Okay, it's not, the music is not stopping completely. This is just a correction, healthy correction, and we'll, go right back to new highs. Okay, why? Because this is usually the final chapter of a bull market. This. Some people were saying, oh, forget it. That's never gonna happen again. Retail will never come back into the market like that again. You guys are nuts if you're waiting for that. All right, people thought it would never it happened. Okay, and it's a coincidence that the market then topped out. I mean, come on. I mean, is that crazy? Right? Is it a coincidence that there tops out and the start of a new bear market from that point with all the money in there now? Yeah, so now here we are, okay? It's the same thing. I do. I won't be able to find it on here. I'll post it maybe to my Twitter if I find it. I gotta dig it up. That goes back further. But what's supposed to happen at the end of a bear market, right? That final chapter is this. Okay? As long as it takes, that's usually the last, that comes at the end, right? As long as this took, it comes at the end. It showed up. So we'll see when this decides to show up. And remember what we spoke about? When it does happen, they're not going to come right back in. They're going to do this for years because they're going to be so distraught, right? That's how it works. And that's, that's that wall of worry that creates bull markets. Some longevity behind those bull markets where you can buy dips, buy corrections off sentiment extremes with confidence, because nobody's in, right? The market knows that this money is going to come in, and it's almost like they're front running them. All crypto? You think so? Parking money in here? Jesus Christ, these crypto guys, they destroyed our lives. Question is, do people have the attention span nowadays to sit around? Who the hell knows? But you know what it is? This is money. They don't look to do this. This is a great measure of like big picture sentiment, because when they come in like this, right, they're super bullish, right? They wouldn't come in throughout all this and the bullish activity that took place, okay? All those years. How bullish did they have to feel that exactly the vaccine? All clear. So they threw all their money in, okay? And on the flip side, like right now, right, and they had Trump. That was another wall of worry. Trump himself, right? He was a walking wall of worry, that guy, right? Nobody felt easy with that guy. They were worried about everything. So now the opposite, right, except the big shots, Eric, and they all made money, except the big shots, Trump's buddies. Now the opposite, where they're trying to sit through this, right? They got in, now they're trying to sit through the pain. We got time. As long as we hold, we'll be okay. In 5 years, we'll look back. You won't even be able to tell this on a chart. So they try to sit through it. But like we said, it's easier to sit through what we're going through right now. Wait till the economy starts to get hit and people lose some work, lose jobs. Doesn't take much. It doesn't take much. Especially when you're looking at this money you parked in and you're seeing statements that at best look like a freaking hockey stick, if not getting worse, right? Oh, it's got to be, forget it. 99, Eric, was insane the amount of money that came in that year. Insane. Everything with a heart and a pulse bought stocks in 99. But there's a big dollar amount. So again, we'll see how this plays out. But the tough part is you can say you're waiting for it, right? And it's easier said than done, because like I told you guys, we can go through multi-week, multi-month periods where this doesn't come in and you get some nice rallies. you get some nice rallies. So I guess the trick is to trade, right? We call ourselves traders at times. You got to trade right now. You got to trade. You can't just sit. You got to trade. Then once we get that, then things get interesting. I forgot we were going to. All right, let's talk about names quick and then we'll wrap it up. There have been a few names just quickly. Last couple of days, you got names like Match, which I spoke about, caught some nice action yesterday. Mostly short dated. I think it was some October stuff involved. But again, coming off the floor, so nice squeeze stuff, Again, as far as how much more upside, I have no idea. But if you see this on dips, still get attention on dips, not into strength, then it could be, they're comfortable with these lows holding. You know what I mean? So you'll be able to tell a lot more into weakness on some of these things if they have any, if there's any commitment. I know a few of you were interested in this action, long dated action. They bought some decent sized June calls, June of next year. So a lot of time. Again, this thing has been obliterated. All right. Now, off the flow itself, you guys don't remember, I guess. You remember how much action this thing used to catch? They used to light this thing up with call buying, light it up. So, we see 10,000 June calls because the thing's been a dead heartbeat for so long. You get excited. You would ideally, for a name to put away off that June action, again, you want to see that commitment, right? So you want to see, okay, stocks rallies a little bit, then there's some weakness, and you see that June buyer or something similar to that order come in and accumulate again, right? So it's more of a process where they accumulate with time, and that giving you a heads up that, hedge fund, the fund, activists may be building a position in it. Right, so that's what you're looking for in that sort of flow. If you like the name technically, like if you think, oh, maybe you can create some excitement, some momentum for a quick trade, it's just a lot harder with dated calls. I mean, they're far out. You're more, you should be more interested in a Match or a Snap, something that catches maybe some long dated calls with spec action around it. Snap has had interest, right? We've seen interest in Snap. It's almost started off that where Amazon, there were rumors Amazon was going to get into that video shit. I don't know. Amazon's getting into videos, right? Am I nuts? Or wasn't that what happened? Something to that effect. Not mentioning Snap, it's just Amazon was getting into videos. And Snap started to get some, right, TikTok feature. Snap started to see some action off of that. And then there's been some decent action there. Again, they weren't coming in buying all these names into strength for a squeeze. You understand? It wasn't shorts hedging by buying calls, right? They were, even though they were speculative buyers, right? They were buying it just for Snap, right? For news or whatever it may be. Okay. So that's the difference in what we're seeing. It's not what we normally see in the flow when stocks are higher or squeezing and we see squeeze flow come in. That's forced buying. You understand? When Snap is sitting here dead and you're seeing buying come in, that's different type of action. So that's the difference in the flow we're seeing in the small select group of names. What else do we see? Oh, you guys mentioned this. This had a little flow, but again, similar setup. LMND. Right. So this is exactly what we wanted. Just more ideas, more opportunities to trade. Right. So again, we don't like the market. The market's a little choppy, whatever the case. We got lemonade off a niner. You think you could get a little squeeze? That's a trade. You understand? That's a trade. That's how you get through bear markets. That's exactly how you survive bear markets. What other names? Oh, this piece of garbage. This actually caught a lot of action too, this Rivian. Same thing, off a little niner here. And you got to squeeze. Doesn't mean Rivian is going to survive the bear market and be at 200. No, it has nothing to do with that. Has nothing to do with that. It's just speculative buyers coming in for whatever reason. Maybe there's news around the name. I have no idea. But betting on Rivian. They're not betting on Lucid or any of the other EVs. When they squeeze, you see all the EVs catch action. No, they just were targeting Rivian. That's the difference. That's the difference. What other names? You guys notice any other names seeing some action? I'm drawing blanks here. ETF flow is tough right now. ETF flow has been, throughout this bear market, it's been predominantly bearish, but it's been bearish. You understand? Like we're seeing October bombs go off still. When was it? Last week? There was some size SPY October puts again. But we've been seeing that throughout this whole bear market. So it's nothing really new. Oh, good call. Good call. ENPH. All right, so you had this crazy move, got a little overheated, breather, and then some sweeper activity coming out. Okay, this is more of a healthy name. These solar names are strong as hell. Strong as hell. Good call. See, you guys are paying attention. Here's another couple of names, right? These are lithium, right? These are lithium plays. So the LAC, I've seen a lot better action in the past in LAC. Had a little bit of flow. This is the one sweepers have been targeting. All right, so look, just a different look. All right, different look. Little pull here, some action, bink, bink. And that's what I'm saying. Like, if this bear market lasts for a while, even from here, okay, you're going to start to notice more of this. Certain pockets of the market that look different than the overall indices and the majority of crowded names. They're going to look different. Like they're going to march to the beat of their own drum in a sense. And then what happens, you're going to see, while the market is hanging in there in a sense, not making new lows, you're going to see this in names. And then when the market ultimately makes new lows, you're going to see these go into a little correction, a little pullback. You understand? And then the bear market will find some stability again, and then you'll see some more names that look constructive. D-Dog, yeah, D-Dog caught an interesting sweep today, April's, with some time. For what we're looking for, again, you want to probably see some shorter dated stuff to give it a nice kick in the ass here. All right, create some momentum for a trade. But trying to form a little constructive bottom here. Does it hold long term? I have no clue. And we can't make that call off of one sweep either. But for a trade, if you see some spec action brew up, or you like the name already, you get in right here, the lower end of the range, and you sell into the $104 range, whatever the hell that is. Yeah, First Solar is another beast. That was breathing nicely too. Oh my God, I'm not that. Forget First Solar. I thought that was consolidating. Holy shit. This thing doesn't stop. They found there's not too many hot groups out there, right? And solar's been one of them, and they're just piling in these things. They're piling in. Damn. Off that, that recent news too, right? But a lot of them look good even before that. Anyway, what else? What else? What other names? I'm drawing blanks here. There were a few of them. Hold on. Let me think. Let me think. What was other names recently? Any other names? I mean, there's not too many, but there were a few more. Snow, nothing really. Little sweep in snow, but maybe we see some action. Maybe we see some action. BTU commodity, yeah, that has been buying for a few weeks now. So buying started here, risk reversal. You see, this is the spot right here, though. You know what I mean? This is the spot. But here you got a nice little breather here. So if you like it, secondary entry. It is a commodity though. So, banks caught a little action. Yep. Decent spot. Yep. Banks caught a little action. Bank of America, I think Bank of America was one of the best ones. Citigroup, right? I think was another. Wells Fargo, RNG, that also caught action today. Oh, Jesus. That's a hockey stick. But that's just as good as anything for what we're looking for. Yeah. Again, you're looking for this. That's it. That's all. That's it. That's all you're looking for in this. What'd they do to this thing? My God. This was the hottest stock on the face of the earth. No, Rob? Wow. Man, this is one ugly looking chart. Holy cow. Jesus Christ. Yeah, SC, I mean, is it SC? Oh, man, that's pretty bad too. Damn it. These things got obliterated. Jesus Christ. So that's why, guys, these are just trades. I mean, these are ugly, boy. Ugly. Yeah, Google has calls from time to time. I mean, the spot's decent in Google, so I can give you my blessing there. Otherwise, you want to see real action in a name like this. Yeah. For a trade though, this is not a bad spot. Yep. But flow wise, quality wise, Google needs to see a lot more than that. Like, just let me give you an example. Like, you see the action that match caught, right? That would be equivalent to like Google catching 15 sweeps today. You know what I mean? On that scale. Like that relative for the amount of action and the type of action that MTCH catches. So you understand, like, the two things. If you like the setup in a name, you don't need to wait for me to confirm that the flow is exceptional to buy it. You can be utilizing it for momentum purposes, and a little flow can do that. Me, I'm just primarily solely going off the flow. I'm only playing names that catch the best action. You know what I mean? And it keeps me selected that way. Because names like for example, Tesla, and there's a ton of momentum. It seems like it catches action all day long, this Tesla, every day. It also catches put action when there's bearish momentum. But so if you got decent spots here, you want to take a shot for a trade. You don't need to wait for spectacular action if you like the setup. But again, just I overemphasize the word trade. You understand? Because it's not like we're seeing huge amounts of buying come in. You know, they're trading, so why shouldn't we be doing the same? And you know, if we happen to get into a little bit of a period where there's some bullish momentum in the overall market, we'll have more names to get involved in. You understand? We're so used to just Apple and Tesla seeing the flow and nothing else that if you sell them, you want to get back into them. You know, the trick is to wait for new action, new names, and that'll keep you disciplined to the point where if there's not new action and new names, you're not buying, and hence the market probably is weak, you know? Yeah, you know, and that's why, like, I still think that the day trade, especially that we're seeing action in names more, the day trade, I think on a risk reward basis is still the best trade, you know? I still think that. Because look, like a lot of these names, when they catch quality action, they're moving that day. You know, like for example, Match. Okay. Now, okay, the stock had some follow through today. So if you sold it, you'd be pissed off. But you know, there are going to be other days where it's going to give back that whole gain. Right. And that's what you got to weigh. So is it worth taking that risk for just a trade? That's something you guys got to decide. You know, it's something you got to decide. But the more quality action we see in individual names, the more comfortable it'll make us feel to hold names over the course of a little more time, you know? And we'll start to see names working out more too, you know? So you'll start to see a Match, even though the market didn't do anything, you know, a Match would have been a nice little swing trade for a week. So you'll start to notice that off the action. So it's worth paying attention to the stuff, even if you're not playing the name, to see how they do. Yeah, well, that's a bear market. You know, anybody who is looking for that follow through on the long side, they take their money. That's notoriously known in the bear market, you know? No follow through. That's the problem with bear markets. And look, even the short side has been, you know, really tricky too. Really tricky too. But we'll see how it goes, right? I don't want to jinx it too much. Knock on wood, we're seeing some signs of flow, and that's always a good thing. Better than not seeing any. You know, and it's something different. It's something different. Anybody have any last things to add or questions or anything they'd like to see or hear? All right. Otherwise, going into next week, we do have a setup for, you know, maybe a bounce of some sort. We got the CPI. I was hoping the end of the week. It's Tuesday, so we're kind of in the middle of that. So let's see. But we do have a setup for a little bit of a bounce. Keep an eye on individual names more than the market anyway. I think that tells us a lot more. My pleasure, Jim. Have a good night, everybody. Enjoy the rest of the week. Tomorrow's Friday already. Oh my God. Flow show tonight, members. We'll see what Mr. Hartnett has to say. Enjoy the night, everybody.